Hi and welcome to MBA Now. I'm Rob Van Raphorst. The commercial and multifamily mortgage market is incredibly diverse. Jamie Woodwell, MBA's Vice President of Commercial Real Estate Research, is here to talk about some of the different forces affecting the market today. Jamie, thanks for being here.
Thanks for having me, Rob.
Jamie, there's been a lot of discussion about the wall of maturities. Can you explain what that means?
Sure. So the wall of maturities, or so-called wall of maturities, has really been a topic of discussion since probably 2009 or so. If you look back at 2006, 2007, peak of the market back before the recession, very strong time for the commercial real estate markets, and then record volumes of $508 billion, for instance, in 2007. Given that a lot of the loans are 10-year loans, the 2006, 2007 loans are maturing in 2016 and 2017. So that's meant that there's been a larger group than usual of loans maturing in 2016, 2017. A lot of those loans were in the CMBS market. So back in 2007, CMBS made up about 50% of total originations. If you look at loans that were set to mature in 2017, out of about $170 billion of total non-bank maturities, more than $100 billion was CMBS. So an awful lot of that wall of maturities really focused on the CMBS market.
So how has that wall interacted with other trends this year?
Great question. If you look at the wall itself, we're largely through it. Out of about $300 billion of CMBS loans originally set to mature in 2016 and 2017, there's just about $55 billion left as of the end of April. So we're working through those quickly. We'll see those loans, really the bulk of even those remaining loans, worked through by the end of the third quarter. So that so-called wall has really been worked through. At the same time, 2017 has started off as a bit of a squirrely year. Normally we see transaction volumes and loan originations really synced up pretty strong. So far this year, in the first quarter, we saw transactions activity down about 15%, but we saw mortgage originations up about 9%. So you've got a bit of a disconnect there, and I think what you're seeing is a lot of property owners keeping their options open.
Mm-hmm. So for the overall commercial market, where do you see it heading this year?
Good question. As I mentioned, it's been a bit of a squirrely start to the year,
right.
And what we've seen is a bit of a downshift, I think, in a lot of parts of the market. It's still moving forward, but when you look at the post-recession growth that we saw across property fundamentals, across property prices, transaction volumes, all of those are in a bit of a lower gear now. That's probably good for an awful lot of the market, but it's something that I think market participants throughout need to adjust to.
Yeah, a lot happening, and there's a lot to unravel, so we really appreciate you stopping by and explaining it to us.
My pleasure.
Be sure to follow us on Twitter at MBA Mortgage and like Mortgage Bankers Association on Facebook and Instagram.